finally, we are onto this thing called an appropriation account. This is new for partnerships only. And remember, this is where we are going to collect all the transactions with partners and transfer to other reserves. Okay. And we're also then going to accumulate all the profits, right? So the point of the appropriation reserve, appropriation account, is to take all the profits and see what is available to distribute to partners. Sometimes we will transfer to other reserves as well to hold some of those profits back. But at the end of the day, we are going to transfer the available profits to each of the partners' current accounts. Okay. Please, it's only shown in the statements of changes in equity, but it's always going to have a nil balance at the end of the year. Okay. Please, guys, clearing accounts, always a zero balance in the statement of changes. The other closing accounts, the profit and loss account, the trading accounts, none of those are shown directly in the statement of changes in equity as a separate column, right? Those form part of the net profit that we show and summarize in the statements of profit and loss and other comprehensive income. So this appropriation account, very important in partnerships. So just a refresher, we just did this journal where we closed the profit and loss account out, the net profit, okay? And we put that into the appropriation account. We've done the profit and loss. Now we're going to look at the credit side, the appropriation account. So that's our first journal. Second journal, if you remember back to when we were doing the current accounts, we raised interest on the capital accounts, interest on the current accounts, we did interest on the drawings accounts. What else did we do? We did the salaries for partners. Remember, we do those separately from the normal salaries of staff, right? Salaries of staff went to profit and loss account. Salaries for partners, I told you, will not go to profit and loss account. We did all of these with a little brackets next to them to show appropriation account, not profit and loss. So now what we need to do is we need to close those accounts out to the appropriation account. Then you pull up a highlighter and let's go through these. So first of all, let's close off the interest on the capital account. We originally debited that. Now we must credit the interest on the capital account and put it into the appropriation account. Interest on the drawings account, same thing. That was initially a credit, an interest income. Now we are going to transfer it into the appropriation account. Debit interest on drawings, credit the appropriation account. The current account could have had a credit or a debit balance. Basically, whatever you had as interest, if you originally debited it, you are now crediting the interest account and putting it into the current account. Remember, this is not interest expense, right? This is interest in the appropriation account on a partner's current account. And if it was a debit balance, then we do it the other way around to clear it out. Now we will debit the interest, credit the appropriation account. Remember, salaries. Salaries, we originally debited the salaries with a sub-account called appropriation. Now we're going to take the partner salaries and put them into the appropriation account. Debit the appropriation account. Same with any bonuses or commissions, any payments or salaries or commissions that are due to the partners. Okay, we also may take some of this profit. Remember, the appropriation reserve is trying to work out how much profit is available to allocate to the partners. What we can do here is I can take some of that profit and hold it back in another reserve. That's not for the partners, it's for the partnership, the business. The most common one here is the asset replacement reserve. So what am I going to do? I will then debit the appropriation account, which is an equity account, right? So I make appropriation account smaller and I put it into the asset replacement reserve. I can have other reserves and do the same thing for each different type of reserve. That's up to the individual partners. Those names are not stipulated by anything, guys. For this exam, you will see a lot of the asset replacement reserve, however. Okay, so moving on to the general ledger, the appropriation account. Remember, this is an equity account. So it gets bigger on the credit, smaller on the debit. Okay, so let's get cracking now. First up, we had the profit or loss account, the very first journal I showed you. That is closing out the profits. Profits make equity bigger, so we credit it. Just remember, this could be a debit. You could have had a loss that you would debit then, right? Then I needed to bring in my interest on capital accounts, interest on current account. If it was a credit balance, or if it was a debit balance, it would be a credit. Then I would bring in my salaries for each of the partners, if there was a bonus for the partner. And then we also spoke about the asset replacement reserve, didn't we? I would debit the trading account, credit the asset replacement reserve. Sorry, debit the appropriation account, credit the asset replacement reserve. Remember this little wording here. I'm still debiting the appropriation account, but I just give you the contra account, the name of the other account where the credit will sit, right? Then I'm going to come along and I'm going to add these up, right? Quickly do a sub-adding, and let's just pretend we landed up with a 300 and a 200. How do I close this off? I bring the highest balance down to the bottom, so both sides get the 300. And then my balancing figure will be on the debit side here, right? Because it's a credit balance. It's bigger on the credit side. I'll take the 300 minus the 200, and that will leave me with a total balance of 100, which I will then split between the individual partners. Let's assume the ratio here is 50-50, so each partner is getting 50 allocated to his current account. Okay, so there was 100 rands worth of profits available to split between partners. Here the ratio is 50-50, let's pretend, so we do the split 50-50 between each partner. Okay, let's journalize that. I'm going to debit the appropriation account, make it smaller, and I'm allocating that 100 to each of the individual partners, and it's, in this example I said it was 50-50. Okay, all of that's also going to be shown where the mark's going to sit for this. It's going to sit in the statements of changes in equity. The journals and the general ledger is just the accounting process. In the real world, we capture the journals in pastel, for instance, and those journals are accumulated and put into the general ledger accounts, right? It's like a little database of debits and credits. Those are then used to communicate to the users, right? What is the financial position and performance? And how do we communicate? With our statements of profit and loss, statements of changes in equity, and statements of financial position. Where the mark's going to sit for this exam? In those statements, guys. Okay, and possibly in some of the notes to the statements. So just note, the ratio of this split between partners is not always 50-50. It is ideally governed by the partnership agreement. They'll say 30-70 or 30-80, sorry, my maths. If there's no governing in the partnership agreement, it's not just automatically equal. If the partnership agreements are silent, then you will do the split according to the capital contributions of the partners. If the capital contributions are just a time and effort, no real money, then you will go 50-50. Okay, but for you, either it will be in terms of the agreement or in terms of the capital ratios. Great, guys, so the appropriation account is done and dusted. This is tricky, work through it. We still need to quickly run through the drawings account close off and then show you, just sum it all up in the current account. Last step will be the financial statements. Thank you.